Well, global stocks are in the red this afternoon as fears of an impending recession grow, with central banks tightening monetary policies and increasing interest rates to rein in soaring inflation. This has caused massive losses from currencies to commodities, and the JSE has not been spared today. For more on this, we are joined by Mccurrie, who is with FNB Wealth and Investment. Wayne, thank you very much for your time. The reasons behind the bloodbath that we are seeing in global markets today has to do with those fears of a global recession, but we've known for weeks that there is this possibility.
Yes, very much so. I mean, sometimes the markets almost seem to defy gravity. I mean, we had a very strong day yesterday, but we are in a bear market. The US is experiencing the highest inflation in 40 years. Interest rates globally are going up and going up strongly, and stock markets are going down in the shorter term. Look, it's absolutely normal market movements. I mean, we've had 12 years of a bull market with low inflation and low interest rates. Now we're going to get a bear market. Look, the good news is commodity prices are falling sharply as well, which will ultimately bring an end to inflation. I mean, the Brent crude's almost 100. I mean, it's fallen 6-7% today so far, and I think it's going to continue falling. So, there will be light at the end of the tunnel.
The rand has also weakened. Wayne, what's weighing down the rand today?
It's exactly the same situation. When the world goes into a bit of a fear about inflation and a bit of a fear about recession, all the emerging market currencies take strain. There's no reflection on South Africa. There's no reflection on load shedding. It's just that the money goes back to the dollar, essentially, and you get weakness. Now, you mustn't panic about the rand. I mean, the rand could go to 17, but the rand at this level is actually undervalued. It's actually quite cheap at these levels.
According to the latest reports, stair may just be saved when you hear what the business rescue practitioner has had to say.
Yes, well, it sincerely hope so. I mean, obviously it provides a service that took serious strain during lockdown, but at least people are going back, they are going to movies, they are going out, and it's very good news for the company and the employees that it is actually a viable business, and it can hopefully continue and actually rebuild itself.
The latest S&P Global SA Purchasing Managers Index also shows that business activity has actually improved in June. This is out of kilter with what we now know in terms of the economic data that has been coming in the second quarter. What is this telling us?
It is a little bit unusual. Look, the mining sector and related industries are doing extremely well. And I mean, even though everyone's suffering with higher interest rates and higher fuel prices, the retailers aren't showing any great pressure at the moment. But, I think, unfortunately, this will turn down over the next few months.
Mccurrie is with FNB Wealth and Investments. We'll have to leave it there for now. Wayne, thank you very much for your time.